I think we were in concert together that we don't think premiums will stay at the numbers that they currently are, both on the buy side and I think even more importantly on the sell side. I think that there will come a time, and we're probably coming to that time sooner than later, where the physical demand will supersede the supply, and that's where you're going to see the premiums change, and it's going to happen very, very quickly. We've seen it before. It happens almost instantaneous. When it does, it happens often. I mean, we've seen it happen 30 times in a day, premium increases.
Well, I mean, you look at, I was talking to one of the primary distributors, and I said to him, there are people who thinking that maybe the U.S. Mint isn't producing silver eagles, and I thought about it for a little bit, and I called him and I said, I know the initial allocations you guys are required to take, but after that, is it the reason that the primary distributors aren't taking silver eagles? Is it because the mint isn't making them, or is that you're choking on backdates? And he said it's closer to the second. It's closer to the fact that we are flush with inventory. This is the issue that created the problem with all the low premiums, is that the public sold into this rally, but I would argue the people that sold into it are gone. They're done. The people that have hung on are the strong hands, and those that are accumulating now are strong hands. Next time it goes higher, not only do I think there won't be the kind of selling that there was, and hopefully it doesn't happen the first week of January when the ETFs rebalance and the new allocations are coming out, but I think it will be an awakening to a lot of people like, holy shit, I better get something.
Low premiums can give off a false sense that physical demand has dried up, even while the underlying market dynamics are quietly shifting. Schectman's point is that inventory conditions can turn far faster than most investors anticipate once buying picks up steam. Premiums track retail supply conditions, not just the quoted silver price, which makes them a useful secondary indicator in their own right. Anyone watching futures alone could easily miss physical supply tightening in the background.
Like gold, because to me, the real problem is in the bond market, and you're looking at the Japanese reverse carry trade that is this close from blowing everything up. As that money is forced home with the higher interest rates that they're paying in Japan, they're going to lose their shirt. And as that happens, just as bullish as it was for equities here over the last 20, 30 years, the unwinding would be chaotic.
Bond market,
everyone runs out the door. And again, like we said earlier, the market is saying it's not about interest rates, it's more about confidence. That's why you're seeing the 10-year go higher and higher and higher, because no one trusts, right? The Fed is, we've seen rates on the front end come down, right? But the back end keeps going higher. So I don't know. I think that, I think this is a situation where the bond market is the real scary part, because if you see, again, you're seeing higher rates and tighter lending standards. Do you think it's coincidence that the head of credit for both BlackRock and Blackstone resigned last week?
Same time.
I mean, aren't these the ones that kept having all the redemption requests in private credit, private equity? It's these things make you go, could it be that there are cracks coming? And if you see a bond market implosion, it's far more dangerous than a stock market.
I was going to say, most people think that they're worried really more so about an equities crash. But reality is the bond market is multiple times larger than the equities market.
And as the bonds go down and interest rates go up, that's confidence, right? So how high do interest rates have to go in a system that no one trusts before you say, I'll give up my gold for interest bearing? You get paid back in dollars that are losing their value. So, it's a hard part to realize that de-dollarization is a gradual process, and it's not something that happens today or tomorrow, but it happens over time. And you get to a point where it starts to, the probabilities of that accelerating, it starts out as a walk and then a
I think what you mean is little by little and then all at once.
I do.
And I think that's what you mean.
That's the reason so many people have the ability to dismiss it, because they're not able to see.
Well, they don't see the littles. They only see the all at once. And, the ones that are the smart ones are catching on with the littles and the
And the
littles.
all at once, you tell me that the all at once collapses or booms that the insiders aren't positioned ahead of that.
Everyone's eyes are on stocks, but history suggests confidence tends to crack first in the much larger bond market. Schectman's argument is that this kind of gradual deterioration usually flies under the radar until markets suddenly reprice risk all at once. Investors waiting around for dramatic headlines risk missing the quieter signals institutions have been tracking for months already. Protecting capital, in his view, means taking slow-moving structural shifts seriously before they speed up.
I think we'll end on this one. This is a good one to end on.
Okay.
Pete Peterson, 2630 says, if all the silver in the world was distributed evenly, every person would have 2 ounces. That's pretty nuts.
How many people are there? 4 billion?
I don't know, but that's 8 billion
I
ounces.
don't think there's 8 billion ounces. I think it'd be less than that, probably more like 1 ounce per person.
X100 said silver pulled out from CME 600,000 ounces today.
Okay, that's my point. It's like, so
Did you pick that
slowly.
up?
No, I didn't see that. And so slowly, I didn't.
No, I'm saying in your car.
No, it's in my trunk.
Okay,
Yeah.
I was going to say, let's go get it. Let's go get
Well,
it.
but that's the thing. Over time, if those that are storing it there that had it delivered slowly start pulling it out like that over time, could it be the U.S. government? Who has the ability? Where is 600,000 ounces going? You know how much that would weigh? A lot.
I want to know where 200 ounces is.
Yeah, I know. That's crazy.
I misplaced 200-ounce bars, and it's driving me nuts. Shadow Band OG again says 5 largest banks in the world are Chinese. They may have the gold now. Glad to hear someone else knows their history. So
Yep.
clearly we know. All right, let's get a couple more in here. We have OC Stacker saying hello, Kevin and Andrew.
Howdy,
How
howdy.
are you? All right, we already talked about that. We did that. Lazy day. That's just what I heard makes sense. All right, that's no good. Barons. Sorry, usually Jana does this for us,
But
but
if you can only see her right now.
oh, you guys have no idea. Okay, so let's just go back to the top real quick because I neglected those. That guy's asked the same question 16 times. What is this? Okay, well, let's put this up here. Wayne Robertson, 7011, says, thanks, Andy and Kevin. Question, Ron's Basement said today that we have way less silver available than people think. Bix might be correct. Thoughts?
Well, I mean, yeah, we probably do because the market, the COMEX market has lived under the assumption no one would stand for delivery. That's changing. And so they sell the same contract over and over and over again. Same thing in London. So the actual numbers are skewed. If price was reflective of the real supply demand numbers, it would be much higher. And this is what they're trying to change over time in exchanges that are same day settlement, especially in another currencies.
Paper liquidity can look plentiful right up until physical delivery starts taking priority over pure speculation. Schectman's case is that how settlements actually play out may matter more than raw contract volume when sizing up the silver market. Futures activity alone doesn't capture true physical availability, which is why delivery trends are worth tracking alongside price. Investors leaning only on headline quotes risk missing tightening conditions building underneath the surface.
He's probably right. I think the markets paint a picture. Look, the COMEX market trades roughly 200 times what is available every day. So, how does that happen? What does that mean? That means that there's make-believe contracts that suggest a different price.
Yeah, and I think we're on track for the 6th-year deficit. I think we're about a 46 million ounce deficit is what's projected for this year on what's coming out
Can
of
you
the
really
ground.
trust those numbers coming out of the Silver Institute? I'm not quite sure.
I know. Well, certainly I think that there's going to be a deficit. I mean, that we know what the actual numbers are. Yeah, Chadley 72, with solid state battery coming online next year, using a kilo of fine silver per and thrifting not being a quality alternative, how could that have an impact on the spot price moving forward?
Just another one of the many
utilities that silver has. I mean, look, silver's not going anywhere. The use cases are only growing by leaps and bounds. It's just the bottom line. And look, now we have data centers that are going to be put up in space. And those data centers are going to, of course, take silver. And the one problem that data centers have here on Earth is oxidation. We don't have to worry about oxidation in space. So therefore,
or heat.
Right. So therefore, that probably will be using more in outer space than it here is in the United, on Earth. So there's so many use cases. I think that, again,
This is why they've gone to great lengths to mask the real price.
correct. So,
Because if everyone knew the real value based upon the real supply, silver would go much higher.
which is why when you listen to Bix, he's a believer that we could see the 1-to-1 ratio.